right, good morning, everybody. Good morning. Welcome to Monday. Hey, Miss Alyssa, nice to see you. It is 9 a.m. on the 19th day of December. Guys, we are close. Close to Christmas. I love it. Means I get to eat all the sugar I want and not feel bad about it. So, good stuff. Guys, my name's Mark. We are going to have a short week this week. Just want to let you know. We are going to be here through Thursday, each and every day, talking about rules, helping you put a plan together, keeping you focused on the absolute best of the best. And then we're going to celebrate some holidays. Each and every morning before I get started, guys, I like to come in and take a look at Forex Factory. Make sure there's not any high impact news that's going to move the market a little crazy. Not a lot going on this week news-wise. Rest of the world has taken time off too, I guess. We do have the housing market index at 10 a.m. It's low impact. We're not going to worry about that so much. So it will be business as usual. We will get together and have some fun. Anything and everything that I talk about is coming from the education page, guys. This is our focus each and every day. And then I put something together this morning I want to show you guys before I get into that page too much. This classroom revolves around you posting charts, around you sharing what you're doing, looking for feedback. And I've made this picture so that you guys can give me the most information, so that you can give me exactly what I need to help you guys out, to help you get to where you want to be. So, when annotating charts, steal this picture, guys. Write your rules on the charts. It's so important that I understand why you're doing what you're doing. A lot of times I'll get pictures, and I can usually figure out where your brain is on this. But if you start writing your rules on your charts, if you start annotating your charts, what happens is you begin associating the outcome with your ability to follow the rules. If you find yourself losing trades and you're not sure why, writing your rules on the charts is going to help you identify. If you are winning an awful lot of trades, writing your rules on the charts is going to help you verify and validate those rules. There's 3 rules for the high probability trend trade. So this is an example. You would show me your momentum, your no termination conditions. You'd show me your area for entry, maybe even your target. And then guys, I think one of the biggest tools that you can use is tell me how you felt. Were you excited? Were you nervous? Were you confident? Did it feel easy? And you're going to recognize a connection between your wins and losses and how you're feeling in the trade. If you're feeling anxious, it may be because one of these rules aren't met. If you're feeling nervous, if you're scared, if you're a little antsy getting into it, you may not be following the rules 100%, and your brain knows that. The second side of that is if you follow your rules perfectly and this trade goes against you, well, then you can say, well, you know what? I followed a plan that gives me an advantage, and it's okay. I'm going to have to take the next one. So we're going to talk about those advantages next this morning. Our first hour is involved with keeping it simple. Guys, do that. Keep it simple. Allow yourself to be brand new. I know I have new people in here. It's okay to be brand new. And it's important that you understand that no matter how brilliant you are, and you guys are brilliant, you're not so deep into the Nexgen software that brilliance is going to kick in just yet. So be a student. Ask a lot of questions. Raise your hand. Sit at the front of the class. Do your homework. Be a great student. Everything that we talk about comes from the education page. First, I want to show you the software user guide. This is your NinjaTrader how-to. This is really anything and everything you need when you're working with the NinjaTrader platform, whether it is opening or closing, connecting to your live data, scaling charts, putting in stops and targets. This is going to talk about how to roll contracts, how to repair, reset data, deleting old charts, chart templates. I mean, anything and everything. Guys, go through, click on some of these and go, you know what? Let me make sure that I'm comfortable doing this. Let me make sure that I'm good with this, because if you're in the middle of a trade and your charts get knocked out of sorts, maybe, I don't know, you had a sneezing fit and you're like, oh my gosh, I'm in a trade and I can't see my 13.2. Where are all my indicators? If you click this F, it's going to bring all those indicators back. But even here, we're not seeing the most current bar. I know it's the most current bar because it's highlighted in black on my 5.1. Over here on my 13.2, there's nothing moving. This white arrow is going to bring me back to where I need to be. These are the things that you really want to be second nature, just to be able to come in, get them done quickly so you're comfortable with what you're doing. And all of that's available in the user guide. And then we have the tutorial section, guys. This is where this is what I talk about. There really are no secrets. If it's something that's going to help you be successful, you're probably going to find it in the tutorial guide section here. And we are going to keep it super simple for the first hour. Hopefully you'll keep it super simple for the first 30 days, focusing on that one trade. It repeats itself every market, every time frame. We're going to focus on a pattern that gets you into a high probability trend trade. And if you focus on that high probability trend trade for your first 30 days, what's going to happen is you are going to be able to read your indicators. You're going to be able to recognize the information that your charts are giving you. And 90% of what we do is reading charts, looking at our indicators and understanding three very key concepts: where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These three concepts are going to give you a foundation that's going to take you through the first 30 days and really to the end of your trading career by understanding these things. So three very key concepts, and we're going to look at them on only two charts. When you download the software and you open your workspace, you're just going to see two charts. You're going to see a 13.2 chart, and this is a broad stroke of a brush. It's your larger, slower chart. This 13.2 chart is really, it's a one-bar event for us as new traders. And we're going to determine a few things really from just being able to look at one bar. We're going to be able to understand and determine the overall trend of the market. If the background on your 13.2 is green, you're in an uptrend. And because you're in an uptrend, you're only looking for rules to be met for a high probability trend trade long. And if the background on your 13.2 is red, you're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. So really, determining the overall trend is going to provide you the first advantage. The advantage of understanding which direction the market's moving and then committing to trading in that direction. Next, on the 13.2, you'll be able to gauge the momentum of the market. This is rule number one for a high probability trend trade. Has to be met on the 13.2 before you look for any other rules to be met. And then you're also going to be able to determine through your chart reading if there's any termination conditions present, any of those areas where the market is likely to stop. Rules 1 and 2 for a high probability trend trade must be met on this larger, slower chart before you ever turn your attention to the 5.1. Good morning, Ed. And that 5.1 is a smaller, faster chart, and this is where you're going to refine that broad stroke of the brush provided by the 13.2. You're going to take that information, you're going to take that momentum, you're going to take that termination condition information when those rules are met, and you're going to simply look for an entry. You're going to look for that best of the best spot, that area where the market is likely to continue. And this is going to allow you to reduce your risk and maximize your profit potential. So, 3 simple rules on 2 charts. When you look at the 3 rules, There's an awful lot going on with them. After a breakout of Fibonacci, new top or bottom, small triggers must be strong and located outside of the large trigger lines to look for rules 2 and 3. It's a lot to take in, right? Do not trade into any Fibonacci areas that are expected to hold. Let them break before continuing in the trend with strong triggers. Guys, I've really done my best to simplify everything for you. So let's talk about 3 rules in their most simple form. Rule number 1 says that you must have strong triggers, and we're going to discuss each one of these rules in depth. And in this picture, what I've done is I've put the rule, and then below it, I've included the advantage that it gives you as you're looking for a trade, because I want you to begin thinking. My rules provide advantages. They provide an edge. Each and every time I pull the trigger when the rules are met, I know that I have the best chance of success. Apple for the teacher. Thanks, Ron. And then the flip side of that is each time you break your rules, I want you to think, what advantage are you giving up? What are you giving away in your quest for a win? So rule number 1 says strong triggers. Rule number 1 provides you the advantage of momentum. Rule number 2 says no termination conditions. No area is likely to stop the market. And when it's true, it provides you the advantage of a clear path. And then finally, rule number 3, and this is the most wordy of the 3, we're going to use a limit order, meaning that we're going to pinpoint with such accuracy that we're going to let the market come back to us. And we're going to use a limit order to buy or sell a pullback at an area. So not only are we going to wait for the market to come to us, if the market's going up, it's going to come down to our entry. Or if the market's going down, it's going to come up to our entry. We're going to buy or sell a pullback. And then that pullback's going to be at an area. And those can be fibs, mid-bands, or 1-to-1s. And they're going to be inside of favorable large triggers. So rules 1 and 2 on the 13.2 give you the advantages of a freight train's worth of momentum and nothing in the way. And then rule number 3 is going to refine those advantages into identifying where the market is likely to continue. So we're going to put that together, and if for your first 30 days you commit to that simple trade, repeats itself on every market, it's going to help you out. So our first trade is a high probability trade. I just like the phrase high probability trade. It makes me feel good about my chances. And this is defined as when each indicator on every chart agrees with the rules for the trade. And typically this is when all the triggers are the strongest. There's no termination conditions. Sounds a lot like the rules, right? And there's no trouble spots between your entry and your target. This is your first 30 days teaching you to read your indicators. When you can read those indicators, when you can read your charts, guys, this is where your world expands a little bit. And this is when you move into a medium probability trade. We're going to talk about these today after we discuss the rules for the high probability, but a medium probability trade is when most indicators line up for a trade. However, a small issue exists. Your ability to read your indicators, to read your charts, are going to help you identify that small issue. And this is going to be the vast majority of your trades. When executing medium probability trades, you're going to take them and manage assertively. Once again, your ability to read your indicators that you develop in that first 30 days is going to allow you to manage these trades assertively. If there's trouble in your way, your ability to read your charts will identify that trouble, and it'll give you a chance to take a portion of the position off and get to a 0 loss level as quick as possible. So our first hour dedicated to that high probability. As we go through the day, we're going to discuss these medium probability trades, and you're going to find yourself in a position because of your ability to read your indicators that you will recognize and probably take an awful lot of medium probability trades. But let's focus on giving ourselves the 3 very distinct advantages first. Rule number 1 says strong triggers. In an uptrend, when my background is green on my 13.2 chart, Strong triggers means that the small triggers are above the large triggers. The large triggers are wide, they're angled in the direction of the trend, and it's that space created between small and large that lets me know that the odds are favorable for the market to continue up. That advantage of momentum is the advantage of odds favorable momentum. In a downtrend, the smaller below the large are wide, they're angled in the direction of the trend. Once again, it's that space created between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. So odds favorable momentum, synonymous with strong triggers, and you're going to commit to that odds favorable look because when the small triggers break inside of the large triggers, we call this a weakening of the large triggers. And the verbiage associated with is anything can happen up or down. So focusing on that best of the best, and guys, it's not going to happen from start to finish. What you're going to find is that odds favorable momentum is going to develop. It'll sustain for a while, and then those small are going to return back. The momentum's going to diminish. We're going to look for our opportunities. That's what these circles are, potential entries on these pullbacks, these wicks. We're going to look for opportunities when we have odds favorable momentum. That's it in an uptrend. Here we see it in a downtrend. Smalls accelerate away from the large are wide, they're angled in the direction of the trend. As it returns, we stop looking, and then here's those potential entries during odds favorable momentum. So rule number one, strong trigger lines. These strong trigger lines provide me the advantage of momentum. You guys with me on this one so far? Identify rule number one. That's how each and every high probability trend trade starts. Rule number two says don't trade into a termination condition. Let that area break with strong trigger lines before trading in the direction of the trend. So, termination conditions are Fibonacci-based indicators that may reverse the market based on a comparison of that area in your trigger lines. These areas can be blue Fibonacci support, red Fibonacci resistance, can be yellow 1-to-1 dots, a cyan divergence low line, a magenta divergence high line, a large sharp midband if the triggers are a full bar away, and we'll look for examples of that one. And then we have one other termination condition, any third divergence in the same area. And I'm going to show you this one on a 5-1 chart, on a smaller, faster chart. Every area that we look for as far as a termination condition happens on your 13-2. Using divergences, a slowdown in the market, we're going to use a smaller, faster chart to identify change on the larger chart. So when we're talking about identifying a termination condition, two things happen. The first thing is price reaches an area, meaning that these price bars trade down, reach support, and when they do reach support, you have to ask yourself, where are the trigger lines? If your trigger lines remain above that area of support, support is likely to stop the market. A termination condition has been reached. Rule number two is not met. Price reaches an area, where are the trigger lines? And you're going to see this at the top. You're going to see this at the bottom. Here, price exceeds the area. Trigger lines exceed the area. This pivot, meaning that the market goes from down to up, is just a pivot and not a termination condition. Divergence creates a line to the right, meaning that there was a loss of momentum when the market created this pivot. It's when price reaches that cyan divergence low and you ask yourself, where are my trigger lines? Trigger lines remain above. Now we have a termination condition. This termination condition creates a full reversal. This full reversal gives me odds favorable momentum. When there's a termination condition from a low in the market that creates a full reversal, we have what's called a strong bottom. This is also called a pivot stop out. This pivot creates the divergence low. Price exceeds and heads the other direction. It's a pivot stop out of a low. This is what we call a strong bottom. We see the same thing on the top. When a termination condition creates a full reversal from a top, we call it a strong top. And this picture shows us an awful lot in regards to termination conditions. Price reaches resistance. Where are your trigger lines? They all remain below. Resistance is a termination condition. Your termination conditions hold true until they break. So can't go long. Price reaches support. All of your trigger lines remain above. Can't go short. Termination condition. 90% of what we do is reading our indicators. And right now our indicators tell us we don't have a clear path either direction. Price comes right back up to resistance, that divergence high and a second resistance. Your trigger lines remain below all of the areas. We have another pivot stop out. This pivot stop out creates a termination condition. The termination condition creates a full reversal. My large triggers go from green to red. That full reversal gives me odds favorable momentum, and now I have a strong top. Strong top, strong bottom. You guys, if you remember on your first 30 days, focusing on those 5-1 trend trades when they happen after a termination condition on the 13-2 gives you your best chance of early success. So rule 2 says allow an area to break. I've got a picture for that. I've got pictures for everything. Here we see price reaches support. Support holds, termination condition, triggers above, no shorts. The same thing happens up top here. Price reaches this area of support. Absolutely none of the trigger lines have broken through. Once again, this is an area likely to stop the market. No trades to be had. When is an area broken? An area is considered broken when both the small and the large triggers get above or below. So this area of support, when both my small and my large triggers break below, support begins to act as resistance. If I have odds favorable momentum, I'm looking for that trade with the trend now that I have a clear path. This is your high probability setup. Either you're into a termination condition and there's no trade, or the termination condition has broken with those strong trigger lines and you can begin to look for a trade. This picture shows you your first medium probability trade. And I like to show this in the beginning because this is going to be the first trade that new users take. Small trigger lines break through an area before the large will. When the smalls break through, and guys, this is such a key part of it. When the smalls break through with odds favorable momentum, you have to have rule number 1 in place. This area has the potential to break. It hasn't broken, but it does have the potential to break. If your entry for a high probability trend trade is met perfectly on the 5-1, you can take one shot at what we call a 50-50 trade. 50% of my trigger lines are through, 50% are not. If my 5-1 entry is perfect, I can look for one shot at a high probability trend trade to see if the area breaks. This will be your first medium probability trade. But you have to understand the rules before you try to take it, right? You have to understand odds favorable momentum. You have to understand whether or not an area is likely to stop the market. It's important to respect these termination conditions, and this is a great example. I have odds favorable momentum directly into 1-to-1s. When I reach the 1-to-1s, if I go through that process, price reaches an area. Where are my trigger lines? Well, they all remain above these 1-to-1s. Because they do, there is no short trade. This is a termination condition. You'll notice the bounce that it creates. It's a large enough bounce to take you out of a position. Rule number 2, the advantage of a clear path typically keeps you safe trading into areas. Well, this termination condition creates a full reversal. This full reversal creates odds favorable momentum. This is what we call a strong bottom. This circle of the potential entry, this is your best of the best chance of success. This is the highest probability trend trade. Over here, we have a pivot that creates a full reversal, not a termination condition, but a pivot. We still have odds favorable momentum and nothing in the way. This may be a great trend trade, but the one that comes from the termination condition is your highest chance of success. When these pivots come from the middle of nowhere like this, they don't reach one-to-ones, they've exceeded support. Your next termination condition, remember we said we're going to go to the 5-1 for the one on divergence. This is going to help you identify when your 13-2, when your larger chart may be changing directions. And on a 5-1 chart, 3 divergence in the same price range may terminate the trend. Divergence is a loss of momentum. When this pivot's created, the market's just losing momentum to the downside. When it happens 3 times, it may terminate a trend. It becomes even more powerful when your small trigger lines work their way inside of the large. So at this point, there's 3 losses of momentum, and you go from odds favorable to anything can happen. Becomes even more powerful when that third pivot from a low is higher than the previous. When that third pivot from a high is lower than the previous. It's a head and shoulders pattern. When you have this look on your 5-1, it's probably identifying this change in the market on the 13-2. Same thing up here. Odds favorable momentum hasn't reached an area. Recognizing 3 divergences in the same location will help you identify this turn not coming from an area. Money look? Yeah, Ed, for sure. So rule number 1. Guys, rule number 1 gives you the advantage of momentum on the 13-2 chart. Rule number 2 gives you the advantage of a clear path on the 13-2 chart. Rule number 3 is when we're going to go to that 5-1, that smaller, faster chart. And guys, you're going to be able to pinpoint your entry on that smaller, faster chart, being able to enter where the market is likely to continue. And during the live market, when rules 1 and 2 are met, this is going to be the look on your 5-1. If we're in an uptrend, you're going to see an awful lot of green bars. The market is trending up. The large triggers are strong. They're in the direction of the trade. This is the point where you're going to say to yourself, you know what? It's time to look for that high probability trend trade. Rules 1 and 2 are met. Let's see if the 5-1 will give me an opportunity to enter. And you're just going to recognize your trigger lines, and you're going to begin to look for the areas that are right by them. It can be fibs, mid bands, or one-to-ones. Rule number 3 says that we're going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price. When everything is going up, we literally want that market to come down to us. And a pullback on your 5-1 is signaled by this reversal bar. One of the most common practices of new users is to just jump into the market, afraid that it's going to go without them. If you wait for this reversal bar, it's going to allow you to create a window of opportunity. That window of opportunity is the area where the market is likely to continue. So when this reversal bar prints, I look down to those large triggers, and I look down to those areas, and I'm literally either taking a drawing tool or doing it in my brain, if that works for you, and I'm looking for a window of opportunity. And that window of opportunity extends from my highest point of support right there at large triggers to my lowest point of support inside of favorable large triggers. I'm going to activate a limit order right at the top of that window, and one or two things are going to happen. Either the market's going to come down and fill that order. If it does, I'm in a long trade at 79.21. Sometimes the market's just going to disappear. It's just going to keep going up, not give me an opportunity. In that case, it's simply not my money. Here the market reaches that window of opportunity, 79.21. Remember that I have the advantage of momentum. I have the advantage of no termination conditions, and I have the advantage now of having taken a trade at an area where the market is likely to continue. My initial stop will go below that window of opportunity. And guys, I will take this trade 1,000 out of 1,000 times. Because when you follow the rules for a high probability trend trade, your win percentage, it's been shown over back testing, an awful lot of people trying to prove it wrong, that this is a trade that typically wins between 70 and 80% of the time. When the market moves in the direction of your trade, you can reduce your risk from below that window of opportunity to below that pivot. And guys, this is your absolute best of the best. And I want to do a little how-to on that window of opportunity. Guys, if I use a shape, I can go from the highest point of these large triggers to the lowest point of these large triggers. These are favorable large triggers. They're strong. They're trending one on top of the other. This is your best of the best look. Your window of opportunity is from that highest point of support to that lowest point of support inside of those favorable large triggers. So while the trigger lines go from here to here, that window of opportunity is from the highest point of support for a long to the lowest point of support. I see a lot of new users taking trades from the tops of the large triggers or from the bottom of the large triggers. We're looking for these areas, fibs, midbands, or one-to-ones, to give us the advantage of having a place for that market to bounce off of. And then you're going to be able to study this look. You're going to be able to build trust in this methodology. And guys, it's just going to be through repetition. There is a certain element of study that must be done on your part to be comfortable with this. Remember we said that rules 1 and 2 on the 13-2 chart, right? So let's get rid of this 5-1. Let's only look at our 13-2. It's a 1-bar event. And guys, this is after the fact. Remember we said that those tails are potential entries. So if I scroll back on my 13-2, and remember, you've got about 10 days of data going backwards. You can scroll through and you can find every instance where this happens. If I have odds favorable momentum, smalls above the large are wide, they're angled in the direction of the trend, I know that rule number 1 has been met on that 13-2. If I have no termination conditions, meaning that price has not reached this area, I know that rule number 2 has been met on the 13-2. If I see one of these tails, I'm simply going to go back and circle it. Guys, this is the beginning of a study process. Give me a Y in the room if you're with me. When I have odds favorable momentum, smalls have broken through, large have not, guys, I can grab my drawing tool and I can circle a tail. That's all we're doing. Sometimes it takes a while, sometimes it doesn't. There's one right there, guys. It took a while to get us to these tails. As the market comes through, anything can happen. Triggers don't have the advantage. If I circle this tail on my 13-2 and it lines up with an area of support or resistance inside of favorable large triggers on my 5-1, well then I know that I have rules met, high probability trend trade. Guys, this is the picture to study. This is exactly what you want, and the only thing that you've done here is you've identified your best of the best entry. You've identified an entry from an area where the market is likely to continue because you had, no termination conditions, and because you had odds favorable momentum. Guys, this is it. This is your study tool. So if this circle on my 13-2, let's scroll the 5-1 over. It pulls back directly to resistance inside of favorable large triggers. It gives me an opportunity. If I scroll back again and I look at this one, let's see, takes a minute sometimes, pulls back directly to support inside of favorable large triggers. I actually took this picture earlier today to help you guys understand how to annotate your chart. So I'm going to post this again in the room. Every time you submit a chart, guys, if you give me this information, if you write your rules, odds favorable momentum, no termination conditions, mid-band inside of favorable large triggers, there was my target. Was I confident? Was I anxious? Was I nervous? Guys, write it on the chart and tell me. Because everything we do is pattern-based. And I want you to see something, guys. This is the picture from this morning in the S&P. Compare it to this picture of crude oil in November of 2021. You're going to learn the pattern that repeats itself on every market, every time frame, so that you can recognize it and give yourself an advantage. Guys, we are literally 13 months apart on these pictures, and they look almost exactly the same. Here's a pre-trade. Smalls below the large are wide, they're angled in the direction of the trend. I can identify my window of opportunity, and I can wait for the market to come to me with a limit order. That's just a larger time frame looking at the exact same trade. You guys with me? Odds favorable, no termination conditions. Wait for a pullback. Price reaches an area of support. Trigger lines haven't broken through. Rule number 2 is not met. And guys, look at the bounce happening. These key areas, these Fibonacci areas of support and resistance, let you know where the market is likely to go. Your areas inside of favorable large triggers let you know where the market is likely to continue. We can also gauge where the market is likely to stop. It's Get Paid Monday. That's my favorite Monday on the whole calendar year. Good morning, Ben. Good to see you, bud. So guys, we've talked about the entries. We've talked about your best of the best. I'm going to give you 2 gifts right here in the room. I put them in earlier as well. I'm going to put them in again. 2 things I'm going to give you. The first thing I'm going to give you is a high probability trend trade checklist, something that you can print out, put on your desk, make sure that your rules are met. This is a reminder to keep you focused on the best of the best. The next thing I'm going to give you, and guys, this is one of the most important things, especially as we come into the holidays, you're going to have some time where you're not actually trading the markets. This is going to be something great for you to work on. This is an example of how to write a plan, how to write a set of rules to get you into the market. We just talked about the rules for new users. So this is the most basic remedial plan that I can offer you. Use the phrase "my trade is," and all you're doing at the beginning of your plan is you're identifying your entry points. My trade is the high probability trend trade. This is a trade that I know when I follow the rules wins 70 to 80% of the time. To enter this trade, I must have the conditions of the checklist met. Commit yourself to the checklist. I haven't had anybody in this room or beyond this room follow a high probability checklist to the letter and not be successful. Throwing that out there. If success is truly your goal, this is your best path. This is the exact same checklist that I just put in there, and all it does is it covers the rules. Am I following the rules? Is the market coming from a good top or bottom? Do I have odds favorable momentum? Are there no termination conditions? Was my area for entry inside of favorable large triggers? And then I'm going to take pictures. Every time I take a picture, guys, just like we did, take a picture of that absolute best of the best long. Put that picture right into your example plan. This is what my trade looks like. For a short trade, my trade has smalls below the large, and the large are wide. They're angled in the direction of the trend. For me to pull the trigger, there can't be a termination condition on my 13.2. And then when it's time to enter the market, I'm going to enter at an area of resistance inside of favorable large triggers. This picture is 100% accurate for what my entry rules are. This is your high probability trend trade, guys. This is your first 30 days. And then that 50-50 trade, that medium probability trade works it in. You have to adjust your plan. Every time you add a trade, every time you add a look, anytime you modify a condition, you modify your plan. On a 50-50 trade, I may say no divergence will be present on the 5-1. Small triggers must be outside of my large on the 5-1. And then as I add this medium probability trade, I also add a picture of what that looks like to me. My smalls have broken through with odds favorable momentum. My large remain above this area. So in order to take a 50-50 trade, my rules say I can't have divergence on the 5-1 and that my smalls must be outside of the large, showing me strong trigger lines. This is my perfect entry for a 50-50. You'll notice 2 bars later, I still have odds favorable. I still have no termination conditions, but divergence is printed. This is not my trade. This is my perfect trade. I put it into my spreadsheet. So I'm going to respectfully ask, guys, if you're with me right now, especially if you're new, does this make sense? You're going to identify your entry. If learning to day trade is eating an elephant, we're taking that first bite. And our first bite is identifying the best of the best area where the market is likely to continue. Once we're able to get this trade over and over, well, now we have to do something with all those advantages, right? We're in the market. We have odds favorable momentum. There's no termination conditions. Let's define a management plan. Management depends heavily on your ability to read your indicators, guys. That's what we're doing for the first 30 days. We are learning to read our indicators. Good morning, Carl. So I'm going to keep it very basic, very mechanical, very methodical. I want to keep my opinions and my emotions out of how I manage a trade. So this approach is probably the best mechanical approach I've seen yet. That's why I put it in the example plan. I will trade 2 contracts, and my initial stop will be 12 ticks. I'll program into my NinjaTrader that the second I enter a trade, my initial stop is 12 ticks. It gives the trade a little bit of room. And it will be adjusted below or above the window of opportunity initially. Remember, we're learning to read the charts. That window of opportunity, we're going to be able to identify it as we learn to identify our entries. So we're just going to put a stop above or below it. When it begins to go in the direction of my trade, I'll move that stop 2 ticks above or below the reversal bar in the direction of my trade. My initial stop, we'll use, this one works. My initial stop goes below the window of opportunity. When the trade moves in the direction, it gets moved below the reversal bar. I will take profits on my first contract at $100 and then move my stop to break even manually. So guys, at $100, that's it. You've got money in the bank. You've got that little dopamine kick that says, hey, you just won. You're successful. Here's a little confidence to go with that memory of success. You can move your stop to break even, and your second target will be $200. The goal for every trade in the beginning is $300. That $300 happens in a $200 move. You take your first contract at $100, you take your second at $200, and that's going to give you $300. The reality is, as you learn to read your indicators initially and you're keeping it super mechanical and very focused, you're going to have an awful lot of $100 trades. Second contract gets stopped out, break even. Remember, your first 30 days is designed to only get entries. This mechanical approach is teaching you to move your stops, but you're not worried about the P&L initially. What you're really worried about is that best of the best entry. Every time you take one of those pictures of your best of the best entry, guys, Nexgen's provided you a spreadsheet. Let me get you to the link to the spreadsheet, just in case. I get a lot of users, maybe they haven't traded in a while, maybe they were trading with Nexgen in the past, life got in the way, they're coming back to it. Maybe you're not as consistent as you want to be and you're feeling like you just need to hone it in, you need to bring it in and simplify over and focus on the best of the best. Guys, this trade tracking sheet is designed to help you do that. It's provided by Nexgen. Even the CME says that you should have a trade journal. And there's 3 tabs. The first tab is the trade tracking sheet. Every time you take a trade, win, lose, or draw, you're going to put it into this first tab. This is my trade. I won the trade. This is what I made on it. This is what I lost on it. Whatever it is, doesn't matter. Don't care about the P&L for the first 30 days. I only care about whether or not you're following rules. You'll put this picture in. You'll say, this was perfect. I won. This was perfect, but I lost. Remember, anything that wins 70 to 80% of the time has to lose 30. Your trust in the methodology makes it easy to take or easy to accept when it doesn't win. Everything you do is put into this first page, and what happens is you begin to recognize the patterns that are making you successful, but more importantly, you're recognizing patterns in yourself. Maybe you trade into termination conditions a lot. Maybe you're jumping in early. Maybe you're jumping in late. The more pictures you take, the more you're going to identify these patterns in yourself, and that's going to give you an advantage in the ability to correct the behavior. Your second page, let me go to this one, is your personal looks. My trade is the high probability trend trade. Every time that trade sets up and it's perfect by the rules, I'm going to put it in the screen section. And what I'm doing is I'm building a database for myself. I'm building 100, 1,000 pictures of the exact same trade so that I can be consistent, so that I know that I understand my rules. And more importantly, if you're honestly taking the high probability trend trade, you're going to develop a trust that makes it so you're comfortable taking that picture every time. Your job is to fill this with your best trade looks. As you begin to develop a management plan, as you begin to recognize patterns, if you need to identify termination conditions, all of this is set up for you to fill. This is your personal journal. And then you have my spreadsheet. Guys, this is 69 pictures of high probability rules met trend trades for you to study and compare your pictures to. Here's another trade that will teach you, the high volume area trade, working on management things, chart reading things, termination, all of that's available for you. Guys, I still fill out my spreadsheet all the time. We're a little over 80 now on high probability trend trades. Every time you guys post a high probability trend trade that meets at 100%, I'm going to steal it and I'm going to take it and I'm going to put it in my spreadsheet. I'm going to focus on my management as well. When I get something about chart reading, I'm going to put it in there. Guys, there's a very simple path to success with Nexgen. Post your trades in class. Track your real-time performance in a spreadsheet, guys. This has been proven over the last 20 years to build success. Learn your trigger line rules for when it's okay to trade. Write those rules down, define them in words and pictures. Simulate daily. Post in class. Make sure you have the correct rules. Don't practice the wrong trades. Guys, I can't stress this enough. Don't build bad habits on simulator that'll carry over to the live market. Simplify your plan. Then you can use Market Replay to download your data, go back and retrade the day that you just traded. Fix your mistakes. If you miss a trade, take the trade. If you take a trade you shouldn't have taken, don't take it. And what market replay allows you to do is it allows you to go back and retrade the day. And it's not about making the most money, because honestly, you know what's going to happen. It's about recognizing the potential available to you when you follow rules. Take pictures of the correct trades, post those in class, and repeat this process every day until you always take the correct trades. Not until you always win, but until you always take the correct trades. Because guys, if you're taking the correct trades, if you're following that simple plan, and you're winning 70 to 80% of the time, you're making money. And if you're making money and you guarantee yourself that you can always trade those correct rules, that's when you trade live, guys. Not until you're consistent on simulator, and then you go live. And then you find out how much you really trust your rules. But it's important to not take the incorrect trades, to not break rules, because what happens is you create this false sense of security on simulator that doesn't work its way over to the live market. Are there any questions about a high probability trend trade? This is your first trade. This is your best trade. For a new user, this is the trade that's going to teach you to read your indicators, to understand where the market is likely to continue. Use that continuation point for an entry. Where it's likely to stop, make sure that rule number 2 has been met. Guys, with me? Quiet class today, a little smaller class today. Awesome. I was looking at it in the other room as well, Ed. It's pretty interesting. And guys, what Ed's showing is a artificial intelligence program that helps you pinpoint where you're making mistakes and how to do it better. At the risk of sounding egotistical, that's my job as well. And my intelligence isn't artificial. I've spent years reading these indicators. I can give you the feedback as well. But I love that you're doing this, Ed, because I'm really excited to see how it works out. And it'll be cool as it shows you problems. It would be awesome if you annotated the trade of the picture of the trade with its critique, because I think that would be really cool to look at. And as Nexgen moves over to a platform, I think that any tool that makes you better is a great tool. I'm not so egotistical that I think Nexgen is the only thing in the world. There are so many great things out there, and you have to figure out what works for you. Some people just hate the sound of my voice. They don't want to hear me critique their charts. But if artificial intelligence does it, they can get the exact same lesson, right? So, good stuff. All right, guys, high probability trend trades. This is what we're looking for. This is what we're focusing on. I take a lot of pictures. These are my pictures today. You know, before we go to the live charts, one thing that I'm going to do today is when you post a picture, I'm going to use my checklist. And I think that's pretty cool that it evolves. It'll be interesting. Interesting to see. Guys, when you post a chart, I'm going to look at it up against a checklist. Maybe you take a pre-trade picture. Is the market coming from a good top, pivot stop out, creates a full reversal? It is. Did I have odds favorable momentum? Smalls below the large are wide. I can check yes. Hadn't reached the area of support, so no termination conditions. And then there's an area for entry inside of favorable large triggers. Guys, this is a pre-trade picture. If you get in the habit, take a picture pre-trade, check it against your rules. Take a picture during the trade. Has anything changed? And then take a picture after the trade. I think that one of the best things you can do is get in the habit of taking a lot of pictures. I probably take 4 or 5 pictures every trade that I take. I take a picture before I get in. I take a picture when my order is filled. I take a picture halfway through, because what I'm doing is if I'm halfway through a trade, I can recognize in the moment, because I've frozen the picture, how things are going, how I feel about it, how the momentum is. Do I still have the advantages? So get in the habit of taking a lot of pictures. And then we're going to end the hour on this one. And then when we go into the second hour, guys, I'm going to look at your charts. We're going to watch the live market. We're going to discuss not only the high probability trend trade, but we'll also look at the medium probability trades. But this is probably my favorite picture that I show you guys. Two types of people in the market, guys. There's sharks and remoras. Sharks are big money investors. These are the guys trading thousands upon thousands of contracts. These are the guys with millions of dollars behind them. These are not the average day trader. Our two contracts don't affect the market. It doesn't move it. It doesn't make it change direction. Sharks are going to create those strong tops and bottoms. Sharks are going to create that odds favorable momentum. Guys, our job is to be the remora. If you're not a biology person, sharks eat fish, and scraps of those fish don't go in its belly. The remoras like to come through and eat those scraps. We can let deep pockets investors create momentum, create tops and bottoms, and then with these rules, with these methodologies, we can take advantage of all of their hard work and then get into the market. That's a guy that tried to be first. He's getting eaten by a shark. So when we get to these key areas, we can identify them. We can let the sharks do their thing. And what you'll notice, the more you look at these key areas on your chart, is when price reaches a fib, whether it's support or resistance, your smaller, faster chart typically goes a little haywire. You see these sharks fighting. You see the sellers and the buyers and the sellers and the buyers and the sellers. And these fights tend to happen right at these key areas. So Nexgen users have the advantage of recognizing where the market is likely to go, where that fight is likely to happen. You can recognize where the market is likely to continue before that area is reached. There it is right there. Smalls below the large are wide, they're angled in the direction of the trend. There's a pullback to a mid-band inside of favorable large triggers that takes you all the way to that key area where the market is likely to stop. So guys, I'm going to leave you with the S&P. I'm going to go take a quick break. I will be back in a few. When we come into the second hour, we're going to look at your charts. We're going to talk about whatever you want to talk about, guys. This is your class. Your questions drive the class. Your questions move the class in whatever direction it needs to be. So when I come back, if you have questions, post them in the room. If you have pictures, post them in the room, and we'll get to work, guys. Back in just a minute. All right, guys, let's get into that second hour. I've got 40 of you in here. I've got 2 of you posting pictures so far. Guys, post some pictures. If you're taking trades, post pictures. What do we see right now in the live market? Price reaches an area of support. This area of support is likely to stop the market because all the trigger lines have remained above. We also see multiple divergences in the same location. There's 1, 2, 3, 4. The 4th is higher. The 3rd had the small triggers in. This is also a termination. The market may reverse. It gives us enough information to stay out of that fight, guys. You can see the sellers take it to support. The buyers push back. The sellers push again. The buyers push up. You see that fight on a smaller, faster chart than you see on the large chart. Guys, I'm going to scroll up. Take a look at the pictures. Reminder, I'm going to open this one first. When you annotate your charts, guys, show me your rules. Tell me how you felt. Identify the reasons that you get in. It's going to help me give you better feedback. Promise. Carl, let's see what you did. Carl says, strong triggers, small below the large are wide. They're angled in the direction of the trend. No divergence. Area of resistance inside of favorable large triggers. Carl, it's a perfect looking trade, 100%. Guys, remember that anything that wins 70 to 80% of the time has the potential to lose 20 to 30% of the time. This is a 100% rules met high probability trend trade. And let's do this. Sometimes you're going to take a trade and you're going to feel like the market's out to get you. If you take a second to use the spreadsheet, it's going to make you feel a little bit better. Termination condition creates a full reversal. Odds favorable. Coming from a great top. Absolutely. Smalls below the large are wide. Looks good. Nothing in the way and the areas are broken. The window of opportunity is easy to identify. It's easy to define. So the entry is perfect. And this is a trade that just didn't work. I would take that trade 1,000 out of 1,000 times. High ticked you and then headed the other direction, right? So after this trade, the market wanted to push up a little bit higher. Carl, you're saying that you got a little market flow confirmation right from that high volume area line, and it continues the move. It's going to happen sometimes. Sometimes you're going to have to take a trade. Sometimes you're going to take a trade twice. Carl, once again, I love it when people ask me this. This looked like a good entry. What were your thoughts? Well, let's take a look. Odds favorable. Let's take a picture of the picture. Rule number 1 is met, without a doubt. Rule number 2 says no termination conditions. Guys, we have not reached that key area of support just yet. Rule number 2 has been met. Rule number 3 says pull back to an area inside of favorable large triggers. If you caught this trade, Carl, I love everything about this trade. I can use my checklist 100% to verify whether or not it's going. No worries, Ed. I was skipping over yours initially, but I want to get them a little bit later. I'm actually kind of interested in looking at yours, but I want to go over a couple trades first. And then, Carl, you're saying that this looked like a good one. Now, your arrow is pointing... Whoops. I hope you're in here, Carl. You may be trading. Your arrow is pointing here. And I'm not sure if that was intentional. Are you asking about this next little pullback? Because at this point, I like, and this is just me, if I get in at 70, I've got close to $200 worth of profit, right? Kind of makes it worth it if I'm going to take that trade to get me to that area. If I'm in at 68, I've got about half that profit, a third of that, or 2/3 of that profit. On this second entry, you've already had 2 divergences. Your small triggers have worked their way inside of the large triggers. Yeah, if you caught the first one, it gave you room to get there. I think the second one, these 2 divergences and those small triggers inside, it's not the best look. If you are already in from up here, it's easy to be break even and try to make that next area. But once you get in here, what happens is if it prints a third divergence and pushes up, you're out for a pretty good loss almost instantly. What you'll do, Carl, is you'll take pictures of these over and over, and you'll begin to develop a plan that suits your tolerance a little bit. You may say to yourself, well, I've got odds favorable momentum. I've got room to the second fib. A lot of the times it gets to the second fib. I'm willing to take this trade, but you have to take it from the highest point. If you get in with market flow confirmation, you're in at 66, and you literally have a 1.5 points to get down to that next area. Did that make sense? I hope. Whoops, wrong picture. Ed, let's look at your picture. This is kind of cool. This is that artificial intelligence. Just another reminder, guys, there's tools out there. Win to loss ratios, winners, losers. Talks about your hourly performance report, when you trade the best, when you struggle. It's pretty cool, Ed. I think it looks a lot like this. Net profit, long trades, short trades, max drawdown, start date, end date, total number of trades, percent profitable, winners, losers, average, ratio of win to loss. There's a lot that NinjaTrader gives you guys if you don't want to go out. Carl, what that is something that Ed's looking at right now. It's an artificial intelligence designed to help you pinpoint your mistakes. It is the HAL 2000 version of me. It's just another tool to help him get to where he wants to be. Good morning, Earl. Nice to see you. $236, $236. Let's see. We have odds favorable momentum. I like it. No termination conditions on your 13.2. I like it. You take a pullback directly to support inside of favorable large triggers. Make some money. You're out at 21.75. Is that a predetermined target, Earl? You know what, Ed? Every trade that you take can be class-based. We can talk about it. Write your entry rules on the chart. There's something to learn. It's everybody's responsibility to focus on the foundation. It's not your responsibility to police yourself. So I encourage different trades because I might learn something. But I like to see rules. It is predetermined, Earl. Okay. So this is one of those trades, guys. Earl, I like it. Everything about it is a high probability trend trade, right? Everything about it is rules based. And here's a great one when it's time to talk management. 25.25 becomes a great target when you have this much momentum. It's another 3.5 points. When the smalls break above, you have that odds favorable momentum. Earl, do you see how this is your entry? And you're getting in awful late here. So somehow you missed rule number 3 on the second one, but you did a great job nailing rule number 3 on the first one. Do you see it? This one, when it goes in the direction of the trade, awesome. Virtually no risk. This one, considerably more risk. So I like it. I like both trades. I think you handled them well. I love that you're sticking to your management plan where you have just one. And I think that this is where, as you grow a little bit and you add contracts, maybe 2 contracts on this one, take your first one off, maybe predetermined, and then when you have odds favorable momentum, you could have taken a second, double your money, triple your money with 2 contracts by letting the indicators lead the way. Great trade, Earl. Nice job. Here we go. Little bit of overrun, right? Anything can happen triggers. Divergences. And now we've got a divergence on the bottom. We've got a little change in direction. Waiting to see what those S&P guys want to do. This is your crude oil. Look at the indecision around the key areas, guys. There's something to this. What did that circle look like? I think we saw this one just a little bit earlier. That pullback comes back, looks good, gets you in. Market decides to spike up a little bit before it heads down. That happens sometimes. Guys, if you remind yourself all the time that you don't control the market, that somebody with much deeper pockets than you is making the market do what the market does, it makes you feel better. Every now and then it's going to spike. Every now and then it's going to run right through your stop. Every now and then it's going to hit your target and then continue for what seems like the next 8 days. And you're going to wonder why you couldn't get a bigger piece of it. Price reaches an area of resistance. Absolutely no trigger lines break through. 38.72 is a termination condition. Here's another picture. When we talk about patterns, one of your termination conditions says a 13.2 midband when the large triggers are a full bar away. So when we're gauging that look, right here at 36.66 on your chart, guys, this is a reversal bar marker. This is the price at which point this becomes a reversal bar, a down bar. If price reaches the midband and these large triggers remain right there at that reversal bar marker, below that reversal bar marker, the odds are favorable for the market and price to pull back and close that gap. These large triggers act as a vacuum. There's like this snapback when price accelerates away. Price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, snaps back to the triggers. That's exactly what you see right here. And what that typically means, doesn't always mean, when you have that large gap back, long trades in that vacuum become difficult, short trades in the same vacuum become difficult. And it's that snapback that gets us to our best entries on the 5-1. When price pulls away from large triggers, it tends to pull back. On the 5-1, when price pulls away from large triggers and then pulls back, if there's an area there and the rules are met, we can start looking for those high probability trend trades based on that pullback. It is the week before a holiday, guys. Here we go. Smalls above the large. This is an area likely to stop the market on the retracement because of all the trigger lines, but there's not a long trade to be had here. There's certainly not a short trade to be had. Guys, we're in a holding pattern waiting for rules to be met. This becomes the most difficult day to teach if we're relying on the live market, because the live market, guys, people are taking vacations. Not in this class, Ed. NASDAQ is like that chihuahua that just ate a pound of cocaine, spinning on the living room floor. Trade entry management techniques, guys. A lot of great information, all in here. First 30-day and beyond, focusing on the best of the best. Guys, here's an example plan for trend trading. I like this picture. Everybody wants to be rich. Hey, what do you want to do with your day trading? I want to be rich. I want to be rich. Focus on the process, guys. Focus on the process of getting into the market. Focus on the process of exiting the market. Let the money take care of itself, and let the money create more money. So start with simulation. When you go live, you can trade some micros. Yeah, for sure, Ben. Let the profits from the micros take you to a large contract. 54 trades Friday. It's a lot of trades. It's a lot of commissions. 51-second average in NASDAQ. I've tried to trade the NASDAQ before, Ed, and what I've found is that it overruns more than I'm comfortable with. But I know you're working on a different plan, letting everything be in the direction, so you may have a plan that works for NASDAQ. My conservative trading style tends to not. Too much movement and indecision. Guys, there's that trade tracking sheet. Overrun 90% of the time. See, for me, Ed, everything I do needs to give me advantages. And something that overruns that much, I don't feel like is advantageous. I feel comfortable that if I decided to spend a couple months with NASDAQ looking at it, I could find the pattern and determine an entry, but I'm not willing to put that much work in. I've already got something that works. Obviously, people are trading it successfully, or it wouldn't still be there. Guys, market replay. If you haven't figured out how to do market replay yet, this is a huge asset. John Novak asked me, he goes, how long does it take to get 5 years experience in the markets? And I thought it was a trick question. I was like, well, it takes 5 years. And he said, not with market replay. He said, with market replay, you can do 5 years worth of trading in 3 years. You can accelerate that learning process. So practice setting up market replay. Make sure that you can do it. Right on, Ed. See, you're developing a plan to trade the market. I love it. Gary, you didn't take that pullback because of the termination condition. Great job. That's an area that has the potential to stop the market. It takes away the advantage of a clear path. You have to make the decision. Am I willing to give away that advantage and still take a trade? Most people aren't. Most people don't want to give away that advantage. Some people develop a plan that does. Good chart reading, Gary. And look at that, market decided to go up, didn't it? We don't control it. The sharks do. Guys, crude oil is caught. Look at that. Support to hold. Momentum. There's just nothing to do yet. Smalls have returned to the large. The large haven't broken through the area. Divergence is printed. Just waiting for rules to be met. Is there something specific you guys would like to talk about today? That's it. What's the volume look like today? This is the ES. The ES is usually around 500,000 contracts. I'm going to build a market analyzer real quick. Guys, you can do this, market analyzer. It's in the user guide section. You can put your instruments on here if you're curious about the volume. That's the wrong contract of crude oil. That's what happens when crude oil rolls. There's your ES. We're down a couple 100,000, guys. Typically, this is around 570, 580. Volume's a little lighter. The movement's not as much. Crude's moving pretty good. There's a lot of people trading, guys. There's a lot of volume, but now the people that aren't as decisive are controlling that market. All the sharks with a broken fin, missing a few teeth are out here. No short trades into support, likely to stop the market. No long trades when everything says down. Not enough momentum into an area that hasn't been broken. So we start to play the if-then. If this area breaks, if I end up with odds favorable momentum, I might look for a move. If this area holds, if the market reverses, maybe tomorrow. Gary, I'm kind of torn. I was thinking about it. I've been playing on simulator for the last month, having a good time, just being consistent. And I am contemplating just waiting for the first of the year. The reality is the rules are the rules. And the patterns are the patterns. And more often than not, if you're adhering to that checklist, insisting on the advantages, even low volume's not too bad. Just like when news prints and you watch the market move in a 100-point range over the course of like 30 seconds, if you come back and study the patterns that it creates in that untradeable moment, it's typically everything that we talk about. So now we have a loss of momentum at a key Fibonacci area, two divergences. The second is lower. The small triggers are inside of the large triggers. Just hanging out and waiting, guys. I was talking to John about that this morning, Ed. If you want to link accounts, you have to use NT8. If you don't want to link accounts, NT7 works, is what he said. That was a conversation he and I had this morning because I was with you on that one. I don't use NinjaTrader 8. I've had really bad luck with it. That's it, Gary. Waiting for them to count. If you go over to the owner section, Gary, John goes through an awful lot of it. I don't understand it well enough to speak intelligently on it. But over in the owner section, let me see if I can scroll over. And guys, just for the record, let's do a tour of this. This is the owner section, trader chat. Guys, this is everybody that owns the software that's been with us for a while. You can scroll through and look at some of the great things these guys are doing, right? It's nice too. Future Ken says 42 ticks per contract. He's stopping for the day. It's 10:28 in the morning. He's hit his goals. Also on the Discord, guys, there is self-training information. There's a whole section on chart reading. Carl, when you go and you click on your Discord and to get there, all of this is that side screen. So if you just scroll it all the way up, here's the traders chat area right there. This is for owners. If you lease, I think you still, Ed, you were posting in there, right? In the trader chat area. Yeah, so go in there, guys. These are the people that own the software. These are the people, like if I scroll through, they're going to look different, but the patterns are the same. Some of these guys are trading the same things that you're trading. Some of these guys are trading different looks. Go in, see what's possible with the software. So Carl F., it's on the side over here, Traders Chat. There's us in the education room. I've got us on a pop-out. There's a section dedicated to the trading rules, key concepts. Here's all your user guides. There's an example trade section. Guys, this is what Nexgen users are doing with the software. Well, how do I know this stuff works? Guys, don't trust me. I might be some Yahoo that stole the microphone. Go in and look at what Nexgen users are doing with the software. Some of them are high probability trend trades, 100%. Some of them might be a different approach. But the more time you spend with the software, the greater your foundation grows, without a doubt. Carl, if you can't find it, let me know. I'll see if I can help. Termination condition, right? Didn't make it through, not odds favorable, multiple divergences. Your indicators let you know where those deep pockets are going to fight. It's either going to clear or it's going to roll. They're knocking crude down, aren't they? Right to that key Fibonacci area. You can see the bounce the last one created. You can see the indecision. Just waiting for that clear path. Like an apex predator ready to jump out of the weeds, hop on a gazelle. Just waiting for those rules to be met, guys. That's all we need. And when they are, don't hesitate. When your rules are met for a high probability trade, guys, you have to believe and trust in those rules. See if I have any pictures I can share. What are favorable large triggers? Favorable large triggers mean that the large and the synthetic are trending one on top of the other. That's a great look. Compared to split triggers, when the large and the synthetic have a gap between them. When they're one on top of the other, whoops, that small window of opportunity works out great. When those trigger lines are split, it creates some challenges going through. I did a series for the mechanical management. Outlining your initial stop, your entry, where your targets may be. Talking about your new stop, entry price. If you want these pictures, guys, to help you with the mechanical entries, let me know. I'll be happy to post them in the room for you. I apologize. I know it sounds like I'm rambling, guys, but if you're not posting and I'm watching a market that doesn't have advantages, it becomes difficult. NG time, there's that mechanical approach for you. They are labeled 1, 2, 3, 4, and I've highlighted on the rules where we're at in the process. Let me know if you have any questions. Nexgen Ben, I'm here through Thursday. We're taking Friday off. Historically, I need to talk to John about it. I haven't. Historically, Nexgen closes for the last week of December and the first week of January. That is historically what they do. We'll see what happens. I don't know. I don't know. If we are teaching that last week, it'll be fun because my brother and I will be sitting in the same room, throwing elbows at each other. Don't say that. NT7 to NT8 graphics wise, like Atari to Xbox, yeah. I love the way NT8 looks. I will, Ben. Gary, great top or bottom? Yeah, termination conditions? Nope. So Gary's looking for a medium probability trade here. He doesn't have odds favorable triggers. He has anything happen triggers. Gary, I like this pre-trade picture. Gary says, I don't have the best of the best look. Not everybody relates to the bar fight scenario, but let's do it. If not the best triggers is something against this trade, one small issue exists. Direction is down. Large triggers are down. Small triggers are down. The area has been cleared. Large triggers are down. Small triggers are down. The area has been cleared. There's a tiny window of opportunity. Guys, it's 7 to 1. Gary says that if it's 7 to 1, he likes his odds in this fight, and he's willing to take a medium probability trade and manage assertively. And of course, it doesn't come get him, right? But guys, this is one of the things that you're going to do as you begin to grow with the software. Your ability to read your indicators is going to put you in a position to understand if there's enough going on in your direction, enough in your favor to help you get that best of the best. Mid-band, support, all of the triggers remain above. Can't go short yet, guys. Small's below the large, can't go long yet. We're just in a holding pattern. What's my larger chart, guys? This is a 21-3. Do any of you guys want to go short from a termination condition that created a full reversal that gave you odds favorable momentum on a 21? This is just a 13-2 going the other direction, guys. 38.63.75 seems to be a really good spot. This looks like a 50-50 with an awful lot of momentum. This doesn't look like a long trade, but maybe that 21 with odds favorable momentum is enough to keep me from thinking short. Just the same concept. Everybody ready for Christmas or Hanukkah or Kwanzaa or whatever you celebrate? Festivus for the rest of us? I hope so. I hope you have plans. Even if those plans are to do absolutely nothing because you actually get a day off. Hope it's a good one. That's it, Ben. Going to the gym, Gary? Takes a lot of patience to be successful, doesn't it? 90% of what we do is going to be waiting for those advantages, guys. Has anybody ever just said, you know what, I don't feel like waiting anymore? I'm going to take a trade and hope it works. I've done it. I found that my hope is the absolute worst gauge for success. But when I change that phrase from I hope it works, you just wait for Ed to do it. When you change your vocabulary, why did you get into that trade? Well, I thought the market was going down. I thought the market was going to reverse. I thought this area would break. Change that verbiage. Why'd you get into the trade? My rules were met. That's it. Either my rules were met or my rules weren't met. And once you have a set of rules that have been proven to win more than they lose, no matter what your rules are, whether it's a high probability trend trade, whether it is an edge trade, whether it is a momentum style trade, whether it's a counter trend trade, when you have a set of rules that have been proven, let's say you take 100 pictures of that trade. And if I have 100 pictures that say when I reach this area, if this happens, if that happens, it's been proven. I won 74 out of 100 pictures that I took. Well, you have a methodology. And then you just wait. All right, the conditions are met. I'm going to take that trade. That's the hardest part for traders, isn't it? Termination condition creates a full reversal. Full reversal gives me odds favorable. Guys, this is a 50-50. Smalls have broken. These one-to-ones haven't completely broken. The support hasn't completely broken. This resistance hasn't completely broken. In order to look for the high probability trend trade or the medium probability, my window of opportunity is huge. We run out of fibs, Gary. That happens sometimes in a strong trending market. Notice that this was a 50-50 on your 21. Large triggers rolling but below the area. Same area. We'll see what happens. Initially, I can put an order in place, right? This is the bottom of my window of opportunity. Odds favorable, 50-50. If divergence prints, I'm going to keep my finger over. Oh, there's divergence. My rules say no trade. Doesn't mean that this isn't a trade for somebody else, but it means that my rules say if divergence prints on a 50-50, it's not my trade. Some people will say, well, if a 50-50 prints and divergence prints, I'll wait for a market flow signal somewhere from within the window of opportunity. This 8-range chart, this market flow chart, guys, as you grow with the software and you begin to understand patterns and you commit to rules, this can become a confirmation tool. This market never even got back into those favorable large triggers. So we just keep doing it, right? Just because one trade doesn't hit doesn't mean that there isn't another. Just because one entry didn't get filled doesn't mean the market won't give you another. And I see this a lot. The market tries to push up, doesn't make it, starts to come down. And this is where I see entries right here. It's going without me. I better jump in. Be great if the market taught us a lesson here and came up to an area inside of favorable large triggers. You see that a lot, guys. Remember that this is a fight. And right now, this fight is happening right at these key areas. There's bound to be a little pushback going both directions. We'll just see what happens. If you jumped in, you're starting to panic, going, oh man, maybe I shouldn't have done that. Let's see if market flow gives us a signal. Circle that window of opportunity. Guys, that's not a small window of opportunity. Market flow signals that initiate a trade, guys, there's a whole section on it. When your trend trade rules are true. We're going to look for an arrow generated, an antenna bar, or a yellow bar with a reversal sign. So if we pull up to that 72 area, guys, if your plan says wait for a signal, let's see what happens. Because honestly, there's nothing else to do. 50-50 style, coming from a termination condition. Is everybody with me on what we're talking about so far? Does that make sense? Let the 13-2 lead the way. Let the 13-2 tell you which direction you should be trading. Let the 13-2 tell you if you have odds favorable momentum. Let the 13-2 tell you if you have a clear path. When you get the information you need, get rid of that thing. Let's look for an entry. Right? You already know you have all the advantages. Does staring at the advantages affect your entry? It shouldn't. Gary, you guys getting snowed on in Chicago again? That, guys, anything can happen. Couple divergences. What's the large chart say about that one? This one says termination condition. Just cold. Hey, what's up, Paul? More snow there last night? I need you to stop that nonsense. If I end up living up that way, it's got to be a no snow scenario. So, Paul, if you could do something to fix that, that would be amazing. It is 44 and raining here. I am back just outside of Austin. Can't do that snowy stuff. Guys, crude oil. A little bit of overrun, couple divergences, pulling right into a midband and resistance. And all of my triggers remain below. Hurry up and wait, guys. Hurry up and wait. Look at the ES. Have you ever noticed? Crude oil, Jose, we're trading 223. ES, we're trading 323. Have you ever noticed when there's a 50-50? It's almost like the market stops. Oh, I didn't see that, Ed. I did not see that. True story, guys. I don't watch the news. I know it sounds like one of those, like, I'm a pretentious hippie. Oh, I don't watch television. I literally do not watch the news. Unless I stumble into something or you guys tell me about it, I'm not worried about the news. The only news that I ever worry about is when there is a high impact release and I'm trying to be a day trader. Look at all that indecision, man. That market just stopped. 5 minutes. 5 minutes to do this little bit right here. We've been on this bar for 5 minutes. To the tick. Price reaches, resistance. Another trader asked you about it. It's good to have friends that watch the news, I think. Termination condition, right? Large triggers are a full bar away. Is it unreasonable to feel as though price might close the gap to those large triggers? We'll leave that box there. We'll see what happens. Oh, look at that. We made it to an area of resistance inside of favorable large triggers. Have 2 divergences against a 50-50 trade so far. You guys want to see if market flow gives us a signal? We'll see if this patience piece pays off. So what am I looking for on market flow right now? Guys, this is your next step. We're going to talk about everything today. Market flow, we're looking for either an antenna bar, even more powerful with stranded buyers. We're looking for a reversal bar, a yellow reversal bar, or we're looking for a signal, a red arrow. So far, all I have is up bars, right? I have a 50-50. I have an area with the potential to break, but it has not broken. There's a reversal bar. That's not a true market flow signal. Exactly, Paul. How hard is it to adhere to the rules? And I just want the rules to be met so I can enter a trade. I just want to see something that'll let me pull the trigger. So far, you don't have it. And it may not give a signal, guys. It may just go without us. Is anybody okay with that? Is everybody okay with that? Some people will take this trade right from the area of resistance and say, you know what? My entry at the best of the best spot, I'm willing to risk a couple ticks. Some people will say, it's not my trade. Some people will say, you know what? There will be more. But it sure enough came right back to an area of resistance inside of favorable large triggers. You can identify your first trouble spot. There's a third divergence. If you took this trade, you could manage it assertively, couldn't you? If you chose not to take this trade, you're okay. It's no big deal. $50-50 trades. I know, right, Ed? Good look. Good eye on that one. Ed just said he has not only 3 divergences on his 5-1, but a reversal bar on his 8 range. How many advantages are you willing to give away before you stop taking trades? Some people will go for a tiebreaker. Well, what does this say? That's iffy. It's a mixed bag there. Well, guys, it closed the gap, didn't it? Was that enough to keep you from trying to go long here? Close the gap. Odds favorable. No divergence. You think it'll get us? Guys, this is a simulator, and I in no way call trades. But if your rules say take a 50-50 with no divergence and strong triggers, that's your opportunity. Is 74.76 broken? 77. Is this area broken yet? The answer is no, but it has the potential with those strong triggers. Gary, did you get one? Gary, everything says up and you went short. You didn't let it get to the area, Gary. This is where trusting, look at this area. Here's the area. Here's the area. It almost made it, right? If you had just waited for it to make it and then look for the signal, so close. No HVA. Gary, there's no HVA on your 8 range. I mean, all the way down here. Yeah, not an HVA trade. You're fighting everything. Guys, this is an advanced trade. This is anticipating, and I love that Gary put the 21.3 was down. This is Gary saying that this is an area likely to stop the market. Got stopped out on his first one. So he takes a momentum style trade. The HVA. I don't think the HVA helps you, not with these trigger lines. But what did help you is that the 21 was down. But the 21 was into a termination condition too. $50-50 with divergence. First one probably didn't catch you. But let's look at this larger chart just for a minute. What's crude done today? Indecision, straight to a termination condition, and now it's just rolling down. 73.90 is our next stop if it continues down. 15th of every month, Paul. Yeah, you've got like 10,000 contracts trading if you're behind. Crude rolls. Put this one in your favorites. This is the Ninja Trader trade desk. This will let you know when things roll. But you see, like, where was it? Crude oil on the 15th. And then if you go to January, if you go to 2023, you see crude oil rolling again. It's not going to January yet. Every month. Wow, that was your ES. Termination condition sure did work, didn't it? Hurry up and wait, guys. That's what we're doing. I'm going to take a few minutes, walk around my house, bang my head against a wall. If you take a trade, post it. If you don't take a trade, take a picture of your chart and write what you see. New users, this is a great tool. Whether there's a trade or not, take a picture of your chart. Tell me what you see. Let's do some indicator reading. I'll be back in a minute, guys. Minute of the last hour. Ed, don't say bingo. Show me pictures. Carl, you caught the short. Made some money. You took that next lower probability short directly into support. Worked out for you. Nice trading, Carl. Going with direction, going with momentum, trading from areas. Guys, high probability trend trades are your first 30 days. After that, you're going to begin to formulate a plan that suits your tolerances. But if you look at Carl's trades, everything is with direction. Everything is with momentum. Everything is from an area. Really well done, Carl. Nice job. George T., good morning. George T., high probability trend trade. Not quite. Not quite a high probability trend trade. And I say that, George, you have a pivot stop out. I love it. Your smalls are above your large. That's great. Your large are still down. Your synthetics are still down. You're not trading from an area inside of favorable large triggers. Is the market coming from a good top or bottom? Not yet, because it hasn't created a full reversal. Odds favorable triggers on the 13-2? Not yet. Smaller up, larger down. No termination conditions. I like that one. Odds favorable triggers on the 8 range? Kind of. Maybe. Where's your 8 range? Definitely not. Large triggers down, small triggers up. Area for entry inside the large on the 5-1? Not quite. So, George, I see what you did. I know what you did. I know why you did what you did. Not a high probability trend trade, though, right? If you're someone that's been trading the software for a while, like George has, it makes sense. It's a pivot stop out. The triggers begin to roll. It's a beautiful trade, George. It just doesn't quite fit those high probability trend trade rules. Guys, this is the kind of stuff, as you grow with the software, you're going to recognize patterns. And the more patterns you recognize, it's more of an edge trade, I think. Yeah, it's a little early for a trend trade. It's closer to a high volume area trade, right? Pivot stop outs, a termination conditions. Smalls are above the large. Yeah. So good stuff. It's a nice trade, George. Here we go on crude. We've got anything can happen triggers with divergence. See how giving away those advantages, guys? There's easy trades, and then there's trades that require a little more thought. There's trades where not everything lines up, and you manage them appropriately. George, let's see what you did. Love this one. Missed that fill by a tick, but when you had odds favorable, everything down, everything down, everything down. Pull back right there to the mid band. You use market flow because of the 50-50, able to make a little money. Nice trade, George. Nice trade again. Notice that George is putting a checklist. on his charts. He's always thinking about rules met, rules not met, right? Small's above the large are still down below the areas. Little decision moment right here. That's it, George. That's all of it. Following rules and patience. Rules and patience. Good stuff. Sorry, guys. I have a conversation going on the side, too, with John Novak. We're talking about that short that we all talked through, remember? Looking for the market flow signal. Somebody with 20 years of chart reading experience said, absolutely, I like that one. That was a good look. That was a trade that I would take. Just because someone else would take it doesn't mean it has to be your trade. Focus on your rules, what makes you comfortable. Look at those advantages. Divergence can be a great advantage, George. For me, it all starts when I'm talking about divergence as an advantage. This is where it starts, are these setups, things that I look at. And the first and foremost is understanding, just like you did, that divergence is a loss of momentum. It means that the market was trying to push down here and the momentum didn't follow. And I think you did a great job with it, George, on that trade that you took, if I'm not mistaken. Not only did you have a pivot stop out at support, but you also had 3 divergences in the same general location, trigger line roll. Your smaller chart with the large triggers rolling with those multiple divergences gave you an indication that things may be reversing. Market flow chart kind of supported it. So I think that watching those divergences on the small chart and knowing that when you have this look, it likes to come back and retest, maybe pivot stop outs. And if you're using the 21.3 like John said, they may try to get down to that 5.901 area, a little unfinished business. You'll be able to tell pretty soon. And John wants to know if it makes the fibs. So guys, same thing happening right now on crude, right? Divergence, anything can happen. It pushes up. Market comes back, retests large triggers that are a full bar away. Taps that exact same area, that key area at 74.36. What's your small chart telling you? 1 divergence, 2 divergence, 3 divergence on a higher pivot. There's a trend change. We're getting odds favorable momentum. Now the large have rolled. Is something going to happen before we get to resistance? Nope, we just reached resistance. Trigger lines are above. Just reading indicators, that's all I'm doing. Up to the mid band. We'll see what happens. Price reaches resistance. All of my trigger lines remain below, right? Resistance acting as an area likely to stop the market. We'll see if it does. It may or it may not. It's the only thing I'm sure of. Anything can happen triggers on the S&P. Looks like a medium probability trend trade to go with the strong trending market. If you took it, you're managing assertively. You're identifying your potential trouble spots, getting to a 0 loss level as soon as possible. Guys, medium probability trades on days like today become the majority of your trades. And skipping medium probability trades doesn't give you a better chance of success always. What it does is it keeps you out of the opportunity to make a little bit of money. So you wait until you've got more advantages and disadvantages. Some people will use a larger time frame. This is a 21-3. Strong down. 13-2, not the strongest look down. 5-1. Divergence as it pulls back up. Pretty cool. One chart gets you to the next chart, gets you to the next chart. Write down what it's going to take to get you in. If your rules are met, take that trade. All right, guys, last hour is your hour. What do you want to talk about? Joel, let's see what you did, my friend. Joel taking that same style, right? Small triggers are above the large triggers. You had a fib right there, Joel. That looks great. Double bottom, 2 divergences, full reversal, smalls above the large, and you take a pullback to support right there inside of favorable large triggers that lines up with an HVA line. Joel. Guys, can anyone else hear me? It looks like I'm not muted on my end. We'll see if Joel can reload. Happens every now and then. I think sometimes people mute themselves. So, good stuff. Paul, coming in. Let's see what you're doing, Paul. Paul says 50-50 with divergence. Only take the best entries. I'm inclined to agree. Paul, I'm not sure. Okay, 50-50 with divergence. So this one was into a termination condition, not really through. This one actually broke, and you'll take that one. What's the difference, Paul? I'm just curious. This one that you pointed out was right into those termination conditions. Hey, Joel, good stuff. This one is definitely a 50-50 with divergence. Okay, so the arrow is up here. Got you. You had a pivot stop out with an antenna bar. I got you. I got you. Joel, the feedback was great trade. Joel, your trade was a high volume area trade. It was a perfect termination condition with triggers rolling that lines up with the HVA. That's also, I mean, Joel, you had every advantage on this one. This is such a beautiful trade. When you get to that mid band, though, no reason to be greedy, right? Take some money and run. Great trade, Joel. I love that one. What ended up happening with this one, Paul? Was that crude? was your 50-50, went without you. There's a second divergence on the 50-50. Looks like it's pushing back to that lower area. Did we put a bottom in? No. If you're looking at a 21 chart, it's not as helpful as you'd like it to be. I'll tell you what, Joel, he gets all the credit. And I'll tell you what, again, learning this software from my brother was one of the most frustrating things I've ever done. Because he's my brother. If you guys can imagine having to post all your mistakes to your big brother, and it took me a while to become a student and not a little brother. Yeah, same thing. Imagine if he was teaching you something and you weren't 100% perfect at it in the beginning. So I'm very thankful for what he's done and what he's accomplished with this software. 50-50, guys. 1 divergence, 2 divergence, 3 divergence, third pivot's lower, right? Right there at the 1-to-1. So now we start playing if-then. If we clear 74.90, maybe we're going up longer, further. If we can't get through that 74.90 spot, maybe that 21, right at a mid-band with everything below areas of resistance, is looking for that next area. We'll find out right here. We're going to find out right here. Anything specific you guys want to talk about? I've got John on the side right now. We're going to figure out a schedule for the rest of the week. We will probably run class to 11 during the days this week as the market thins out a little bit and there's fewer opportunities. After Thursday, Ben, this is your schedule that I'm getting right now. We will all enjoy our Christmas through New Year's. And then I will teach the class January 3rd from Sarasota, Florida. And then I will teach it on the 5th. John will take it over on the 4th. Here we go. Guys, these are the conversations we have on the side. I know, right, Joel? We're going to close Thursday at 11. We're going to open Tuesday, January 3rd. No live chat room until the 3rd. Then on January 4th, John Novak will teach it while I fly back to Austin, Texas. That will be my 1-year anniversary. And then on the 4th, I will teach class. Then I'm going to hop in my car and head west. Should be a good time. So you guys are going to get classes from all over the continental United States for the next year. It's going to be fun. There's that termination condition. Absolutely no trigger lines through. Man, they did it again. Rule number 2, guys. Rule number 2. Keeping you safe. You live in the big city of Camp Wood, Texas. I'm not sure where Camp Wood is. Where is that, Joel? I'm right outside of Austin for the next 10 days. I was in Dallas yesterday. I'll be in Sarasota at the end of next week. 200 miles west of Austin. So you're out in the desert. Oh, Paul, you took it 50-50. Second divergence. You take it at the lower spot. Manage quick. Get to break even. Nice trade, Paul. Yeah, we're right in the hill country right now. I'm literally 150 yards from Lake Travis, where we are right now. We sold our house, Joel. We're traveling the country. Kids moved out. Paul, great execution on that one. And I think waiting for that lower second divergence, look for the lower entry. Strong trade, Paul. Now we cleared those one-to-ones, didn't we? That makes me feel better. Now we can start playing that if-then scenario. ES, trying to figure out what it wants to do. There's those pesky fibs again. Trigger lines tell the story, don't they? Somebody said once, I'm not going to say who, somebody said, wait till it's obvious. When every chart's the same color, when all your triggers are strong in one direction, when your areas line up, it becomes obvious. And guys, I fought that word obvious forever. Because what's obvious to me may not be obvious to you. This is a picture that we took. Ben, this is a picture that I took. Well, when's it obvious? When everything's red. Every chart is red. Every trigger is down. Every path is clear. When's my best chance of success? Every chart is green. Everything says up. What's your obvious, guys? My obvious right now, because I'm brand new, is strong triggers, no termination, pull back to an area of resistance inside of favorable large triggers. That's my obvious right now. Eventually, this is going to be my obvious. Termination conditions at support, things roll, I'm going to look for an HVA. That may line up into a different obvious, maybe a continuation trade obvious. Maybe it'll turn into an edge trade obvious. Define your obvious. What's your best of the best? Is it anything can happen triggers with every area cleared and a pullback to an area of support inside of favorable large triggers to try and trade with a strong trend to try and get to the next area? That may be your obvious. Paul's learning to read that divergence, isn't he, John? He's starting to recognize, if I get a second divergence, what's my expectation? For those of you that are new in the classroom, I know we have 39 people in here. The more you post, the quicker you're going to get to where you want to be. Seen it 1,000 times. The more that you post, the more feedback you get, the easier it becomes for you to recognize and to follow and to understand your rules. Let's see how these play out on the ES. What do you guys say? I'm going to be quiet for a second because I can feel myself getting to that rambling point. So post a picture, ask a question. Otherwise, I'm going to sit here and call my brother names via Skype. Large triggers are down, small triggers are above it. Not a high probability trend trade into those termination conditions, right? They all look the same, Ron? Well, I think that right there opens up a little discussion, right? In after trouble, out before trouble. Ron, I have gone from being just anxious about your plan to absolutely loving it. And it's going to bring us to a great conversation. Guys, if I look at Ron's trade here and I scroll back through my history and I find 50 trades with Ron's name on it, I have 50 trades with the exact same look. I have 50 trades with the exact same advantages. I have 50 trades with the exact same entries. I have 50 trades with the exact same exit plan. Ron, I love it when you post trades because it lets me remind everybody that your trade should look the same. If you have a plan, if you've written a plan, if you've said, my trade is, and you've written that out and you're honestly following it, all of your trades should look the same, right? If this is my personal trade setup, shouldn't I be able to click on this trade? Look at that. High probability trend trade. If it's really my look, what does this one look like? High probability trend trade. High probability trend trade. Consistency is key, guys. Consistency is key. Go back and look at your last 100 trades. Do they look the same? Or are you changing things up based on your emotion every time you take a trade? This is the S&P. 3 divergences, pivot stop out on an 8 range. Somebody says it's probably time to stop trying to take shorts. I'm inclined to agree. It's not obvious to the downside, right? Ben, 100%. That's not so bad. That's an honest day's work, isn't it? Average time in the market, 0.8 minutes. Ron, I'm professionally homeless is the best way to put it. My kid thinks it's hilarious when his friends go, where do your parents live? He goes, oh, they're homeless. We sold our house, 90% of what we own. My wife is an amazingly talented RN with a lot of experience in leadership. So she's going to take contracts all over the country. Our kids have moved out. So I am in Austin to celebrate Christmas with my children. I'm going to fly out to Florida to celebrate New Year's with my brother. We're going to drive back or fly back into Austin, load up the car. If it doesn't fit in the car, it doesn't come with us, which is pretty cool. And we're driving towards San Diego. And then she's interviewing off and on as we do it. But we're hoping to land the first contract probably in Oregon, Northern California, something like that. But you never know. We just know that we don't want to be up to our ears in snow. I'm in a very fortunate position in life. We're doing exactly... Oh, gosh, no, George. One of the nice things about being a contract nurse is they pay for your Airbnb. I don't want to live in an RV. I'd never make it. There's that termination condition holding up, right? So, Ron, that's my story. She got a job offer the other day in Raleigh, North Carolina. I was like, that might be kind of cool too. Get on the East Coast instead of the West Coast. After winter, yeah. That's awesome, Ron. Yeah, winter's coming. That's why we're going west. You know what? I love camping, George. I like to, in my 20s, I lived in Colorado, did a lot of backpacking in 7 or 8 miles to our camping spot, carrying everything with you. So I've still got everything to do that. That's going to be a little bit of mine. Gary, I grew up in Houston. Humidity doesn't scare me. I like to sweat. I lived in Phoenix for a while. 120 degrees. You sweat, it's bad. It's fun, Carl. I feel so fortunate to be where I'm at right now and to have a job where I can teach you guys from anywhere in the world and to be able to day trade when I'm not teaching you guys. Life is pretty good. It should be. Joel, let's see what you did. Uh-oh. The gold wing. I do, Carl. I've got a laptop and a 32-inch monitor that I bring with me. That's my setup. Joel, that's a good looking bike. Ready? Fun fact. I am a Honda certified mechanic from back in the day. I rode motorcycles forever. Used to road race 600s. How cool is that, Dan? If you told 20-year-old Mark that this is where I'd be at 50, he would have never believed you. Guys, what we're doing here, George, they have changed dramatically. They have changed so much. My first motorcycle was a 1974 Honda. Carbureted. Yeah, very tamed down. I can't think of any reason to own a house right now. Something breaks in an Airbnb, something breaks in a rental. They fix it, I don't. I'm just enjoying the ride that is life. It's a lot of fun. There we go. They broke through, didn't they? Guys, when a trend looks like that, when the market has dropped 30 points, that termination condition lets you know don't go long. Couldn't go short until we broke this area though, right? There's that larger chart. 21.3 said more down. Eventually you can add another chart into what you do. Ron, what the heck is that? It's like a 32 Ford motorcycle. Is that yours? That's pretty cool. Desert buggy? Not on those tires. That's awesome. How crazy do you want to get? How much money you got? That's the only question people ask. Oh, you want me to chop the front end? Yeah. Is that yours? That's awesome, Joel. Joel, you're following rules today, aren't you? Do you guys ever stop and put that correlation together? When you have your best trading days and you ask yourself, well, did I follow rules? And the answer is yes. There's a correlation, guys. This is what every trader has to learn. Ron. Fair enough. I rode motorcycles so long, if I'm going to have the illusion of a motorcycle, I better be able to lean that thing into a turn. Joel, great job following rules. Have a great afternoon. Yeah, I'm done with motorcycles too. My wife said get one if you want one. I don't think I want one anymore. I don't trust people on cell phones. It was bad enough before cell phones. What's crude oil doing? Anything can happen. We cleared the area. Gave away the advantage of momentum. Yours said don't get one? I'm at the point in my life I'd rather buy a sports car. Actually, I'm going to get another Jeep. I want to get another Jeep. If you're a motorcycle person, get a Jeep, pull the doors off. It's just as fun. This one's yours. There we go. Look at you guys. We got all the daredevils. Ah, see, that's fun. Fire roads were my favorite. When I lived in Phoenix, we'd go out and run the fire roads, and you'd spend half the time with the rear tire stepped out about 2 feet, full on the gas. Most toys win. When you do that in Arizona, rattlesnakes go after your boots. It's a lot of fun. Good looking bikes, guys. Nice little Corvette in the background, too. Life's short, guys. Make memories. Anything can happen. Loss of momentum. And now it's pushing down. Unlike a wife, these are paid for. Man. And she still became your wife? Odds favorable. 50-50. Divergence potential. Can we identify our window of opportunity? In the event that divergence prints, maybe we make a decision. I'm the worst motorcycle passenger ever. Scares the ever-loving heck out of me. I have to be in control. Have to be in control. Very nice. I should come out and tattoo Adam, Ron. All you bikers. Here's your 50-50 with divergence, right? Let's see if market flow gives a signal. So far, no market flow signal. Where are you again, Ron? There's your market flow signal. Have to manage assertively. Myrtle Beach, South Carolina. I like South Carolina. This is where you make a decision, right? You got a reversal bar from the area, but it is 50-50. You have to manage assertively. HVAs cause higher divergence 75% of the time. They most certainly do, John Novak. What's John talking about? When that high volume area prints on a 50-50, this is where that higher divergence comes from 3 out of 4 times. Y'allville. I would fit right in. I say y'all and fixin' to. I had a boss in Colorado, Harvard educated. He was a writer, trust fund, wrote science fiction. One day I was like, yeah, we're fixing to go snowboarding. He's like, fixing to? What's broken? I'm like, I don't know. I'm just a hillbilly. Leave me alone. How we doing today, guys? We're in here talking about accents and motorcycles. Fixing to get rid of. Absolutely. Fixing to get lunch. Yep. Fixing to shut it down for the day, guys. Smalls below the large. 75.71 is a termination condition to the downside. I don't have momentum to the upside. Can I look at a higher time frame and see what that says? Higher time frame says 70's got the potential to hold. Yeah, I guess so, George. NG time, what John was saying. Let me go to the chart that it was on. Let me go to the other. On a 50-50 trade, NG, actually really any, when this high volume area line prints, take care, Ron. When this high volume area prints against the trade, typically that's where your next higher divergence comes from. It's one of those great things that you'll find if you come over to the Discord under chart reading. Let's see where he put that one. There's a lot of chart reading stuff in here. You too, Jim K. Guys, there's an awful lot going on. Awful lot going on in the chart reading section. Go check it out if you haven't. A lot of great information, things that happens. When we talk about chart reading, you're talking about those things that happen over and over. The things that happen. But NG, did you understand that concept? If you were thinking about that 50-50, that high volume area line, gives you a little cause for concern. And then there's that continuation, guys, right up to the top. Whoops. I don't really use an 8-range chart very much, but I like to have it available. I tend to stick to 2 charts, just like we teach in class. Sometimes I'll use a 21 chart. to look at that overall momentum. Sometimes I'll use a 21 chart to gauge termination conditions. My goal as a day trader is to continue to get better. 21 big picture, it works. Sometimes it'll confuse you though. Sometimes a 21 will tell you something in your smaller charts. I missed a lot of moves based on the 21 because just like the 5-1 is a smaller, faster chart, so is the 13-2. So the 21 says that these areas are likely to stop to continue that move down. 21 says, or the 13 says don't do it. But maybe the 13 gives an opportunity to get up to where the 21 wants to continue down. Smaller, faster charts, guys. Yeah, for Ed, for what you do, that overall, that momentum works great, doesn't it? John's look for a weak 21-3. Anything can happen triggers. 50-50 because triggers areas above. So if you were thinking about a short from resistance, it's going to be a fight. It'll all become obvious though, right? To coin Nexgen Ben's phrase, it will all become obvious at some point. Everything's going to agree and give you an advantage. Take advantage of it. That's what someone wrote, right? Good stuff, guys. Home stretch, 10 minutes. Anybody want to talk about anything? Carl, I started traveling a few months ago, honestly. We left Austin, went up to Dallas, spent a couple of months in Dallas, made it back here. That's the look for strong shorts at the area. Ed, I can't help you. I haven't been able to make it play nice with me, to be honest with you. Browse the owner section. There's a lot of people talking about it. There's people that use it every day. John's been using it every day, I think, and done really well. Guys, this is a great look. If you're going to use the 21 to try and take an edge trade, that's it. That's your look. Conversely, that's not your look. See the difference? Odds favorable, anything can happen. The patterns repeat, whether it's a 21 or a 13. Just put it all together. And guys, here's an interesting one too. Stop shorts. This was from a while ago. And that stopping shorts is what you do until the area breaks. Stop longs until the area breaks. Just because you say something, I wanted to go back to that picture. Just because you say something in the moment, stop shorts. Well, of course. But when it breaks, can't we look for that opportunity again? Termination condition says no longs. Termination condition says no shorts. If there's an opportunity between that moment and the next termination condition, take it. Just because this resistance held here doesn't mean that the market won't go up to this next level. Just because this support didn't break doesn't mean that it won't eventually break and maybe go to the next level. So be in the moment. I used to say, oh, I can't wait for this area to hold. And everything would change before that area would hold. Momentum would change, direction would change, areas, everything would change, but I would get so married to that opinion that I formed, I would attempt to take trades outside of where I needed to be taking them. How is what to trade? Ed? I don't know. John does it. I don't trade the Ethereum. Not tradable during the day. Ben. That's it. One trade. Better trades, right? More contracts. Check out crude oil, guys. Pivot stop out. Full reversal. Pivot stop out on the highest time frame. Pivot stop out on the 13.2. I hope that kept you out of a potential long, right? Now smalls are through the area. The large are not. The mid band is not considered a termination condition because the large triggers aren't a full bar away. But I don't have any areas inside of favorable large triggers. We're in one of those, let's see what happens. And then if my rules are met, we take a trade. Guys, I think that's it for me today. Good day, a lot of talking. Think about things you guys would like to discuss this week. If the market's going to slow down a little bit, let's make sure that you guys have all your questions answered. Let's make sure that you guys are getting what you need. Gary, I think you already showed this one. This was the one that was supported by the 21.3, right, Gary? By that strong trigger line. I like the trade from up here with that 21.3 like that. I think you just had to let it get to the area. And then that little stab back for continuation. Good heads up. It's all right. You want to post the right one? Gary, one thing when you're posting this one, show that 21.3. Like show that odds favorable momentum. Line up those areas. It's pretty cool. It's a great trade. It really is. It's a great trade.